Hi, everyone. Welcome to episode 43 of Takeaways. My name is Patrick Searcy. I'm the Director of Marketing for ALN Apartment Data, and I'm joined by the actual star of the show here, Jordan Brooks, our Senior Market Analyst. Jordan, how are you?
I am doing great, Patrick. How about you?
I'm doing very well. The year seems to be getting off to a pretty decent start. We're talking about the article from the February newsletter. It's called January Multifamily Performance Was a Step in the Right Direction. That sounds good. And right out of the gate, you mentioned national average effective rent and occupancy have declined for 5 months straight. That seasonality seems to be making a return after a pandemic-induced hiatus, and that national apartment demand is improving. Now, before I get into my question to you, I just want to give you a quick reminder to those watching to subscribe and like this video. It helps us out a lot. You can click that notification bell so you don't miss any new content on YouTube. Jordan, back to you. Let's key in on some of the absorption data. Were there any specific markets that stood out to you for absorption data?
I think to start with, just one interesting aspect that I didn't really have space for in the newsletter was if you take all the markets nationally, sort of as a group, about 40% of markets around the country had positive net absorption for this period that the newsletter covered, which we should specify again as October through January. So 40% positive, about 60% negative. That doesn't sound great. But as you mentioned in sort of your intro there, we are in that portion of the calendar seasonally where we do expect demand to be fairly soft. So that's not as alarming maybe as that might seem. In terms of individual markets, though, what was interesting was, areas like New York, LA, Seattle did pretty well in that period. New York actually led the nation, of course, in aggregate units. That's one of the largest nations, so not overly surprising there. But even on a percentage basis, once you adjust for size, New York looked pretty good in that period. And then, some of the markets where we've seen a ton of new supply coming in, Miami, Orlando, Austin, also did pretty well from a demand perspective in that period. So that was good to see. And then also I'd be remiss not to mention, a market like Madison, Wisconsin, the Midwest, we saw outperform last year relative to some of the national trends. Madison up there near the top of the list for this sort of winter period in terms of demand. So that was also encouraging to see, that kind of continue. And certainly on a percentage basis, adjusting for market size, Madison had a fantastic period. And then on the other side, some markets that struggled a little bit. You're looking at San Diego, Houston, Atlanta in particular. So again, some of those large kind of Sunbelt southern markets still struggling a little bit. That's kind of the dichotomy that we saw.
Well, let's switch gears and talk about rent performance here. What markets stood out in that data?
Yeah, so rent growth, as you would expect, fairly similar to absorption in terms of the percentage of markets that were either positive or negative. So about 60% of markets with a negative average effective rent growth for new leases in this period aligns almost perfectly with the percentage of markets that had negative net absorption. And of course, we saw some of the markets with particular rent struggles had positive demand results. And so again, we're still seeing sort of that price sensitivity where when the rent growth cools a bit, we see absorption improvement and maybe vice versa in some cases. So markets, I would say, that struggled in particular, Austin, which I just mentioned as a positive for the absorption side, that did come at the expense of rent growth, almost a 4% decline in average effective rent for new leases. San Antonio, almost a 3% decline. And then Orlando, another market that I mentioned as looking good from a demand perspective, that came with a 2.5% average effective rent decline. And then other areas, Raleigh, Durham, Charlotte, Phoenix, again, these are areas with a lot of new supply. That's been the case for a pretty extended period at this point. All of those markets saw decreases of more than 2% from October through January. So again, the markets that have really been dealing with some new supply pressure, showing up on the list of markets struggling from a rent perspective. And then again, some of the markets where we've seen demand rebound pretty well, given the seasonal aspect, that did come at the expense of rent growth.
Well, let's talk a little bit about what ALN is up to over about the next month or so. I usually ask you what you're up to. Let me just quickly say that over about the next month, You can see ALN throughout the country. We'll be at the Nevada Market Trends Trade Show on February 22nd. We'll have a presence at the Builders Show in Vegas. That's starts on the 27th. And then Fort Worth Apartment Association charity bowling tournament is happening next month. You can also see us in Detroit and in Washington, D.C. DC for the Advocate for NAA. Jordan, what do you have coming up?
So I will also be in Las Vegas for the International Builders Show. That's the National Association of Home Builders. I believe my session is on the 28th, so that conference starts on the 27th. I have a session on the 28th at 8:30 in the morning if anyone wants to get up early and come check that out. It should be a really great, we've got a really star-studded panel for that one. And then I'll also be March 7th is the tentative date right now, doing a webinar for the Institute of Real Estate Management, the Southeast Florida chapter. So there will be more details on that across our social media as details are finalized. And then March 26th, another webinar for the Myrtle Beach Apartment Association. So if the Southeast Florida region or the Myrtle Beach market are in your territory or relevant to you, then definitely check those webinars out. And I think that gets us through the first quarter. So ramping up a little bit more slowly this year.
All right. Well, make sure that you keep an eye on our blog at alndata.com/blog for any of our new written content. Of course, you can check out our social media. You'll find all sorts of great information on there, original content and announcements and whatnot. You can follow us on Twitter, on X, at ALN APT Data, or on Instagram, LinkedIn, on Facebook. You can just search for ALN Apartment Data. Don't forget to like and subscribe and click that notification bell so you don't miss any new video content here on YouTube. Jordan, thank you so much for your time this month. I look forward to talking with you again soon.
See you soon, Patrick. I appreciate it.